What's up, everybody? Hope your day was great. Stocks are doing pretty well. We had Trump tariffs become the topic of the spotlight again. We had Trump possibly announcing a new Fed chair pretty soon, and this will be early. And then we got some more data to get into. Y'all are going to love this video. Let's learn together, and thank you for hanging out with me. So pretty much today, stocks are doing pretty well. This is the NASDAQ 100, and you see that today they went on to continue rallying, breaking past that barrier of that new all-time high, and we're all the way up to 547 on the QQQ, the NASDAQ 100, this index that tracks that. And what is the SPY looking like today? Guys, today. Yep, there we go. So it looks like we're about $1 over, and in the after hours we're still heading up. So we're still hovering around these new all-time highs, and a market that can advance in both the face of good news and bad news is what you'd call a strong market, is the word going around. We had a Wells Fargo piece come out, and this survey, according to the Wells Fargo Investment Institute, there are 3 risks that investors should keep top of mind, and these risks are along the lines of tariffs, the budget bill, and the US debt ceiling, all being possible issues that could slap us in the face later on. And it could get better or worse regarding this. A lot of people think, especially with the tariffs, that hey, a lot of the worst of the tariffs could be behind us, but we truly don't know. It could get completely worse from there. And then the budget bill, it could get worse as far as spending, and then maybe we don't get everything we wanted as far as tax cuts or government spending to kind of in a way prop up the market. So all of that is to be determined. But we also got some more surveys out. We got the AAII investment survey. This is an investment sentiment survey, and what it does is it asks individual investors if they're feeling bullish or bearish. And what we see is that 32% of bulls is where we're really sitting right now versus, wait, most current. Wow, so we're at 35.1% are how they're feeling. So 35.1% feel bullish compared to the 37.5% historical average. So we're a bit below that, 40% feeling bearish, and then slightly under 25% feeling very neutral right now as far as how they feel the stock market will be in the next 6 months. And I just thought that was interesting right here. Optimism among individual investors about the short-term outlook for stocks increased in the latest AAII sentiment survey. Meanwhile, the neutral sentiment and pessimism decreased. Bullish sentiment expectations that stocks will rise over the next 6 months increased 1.9 percentage points to 35.1. Bullish sentiment is below that historical average of 37.5% for the 20th time in 21 weeks and is above 30% for only 12th time this year. So all interesting news. We also got this other survey out. I couldn't actually get access to this one to show it on the screen, but Investors Intelligence Advisor Sentiment Index. This one's more so for financial advisors. It has a bull and bears spread of 10.2%, and this 10.2% is seen as a cautious reading. Then let's check out the Fear and Greed Index, which where we're at on this is we're barely in the what you'd call the greed. It has been declining over the past weeks with all of the news going on, but 62 reading on this, so we're in the greed regarding the markets, but we're not like overly greedy right now. So with stocks, I mean, a lot of people are piling into these stocks, and a lot of people are piling into what's called the Magnificent Seven. And this Magnificent Seven, there is an ETF called the Round Hill Magnificent 7 ETF. Here, let's see how this one's been performing. Okay. So yeah, this one's doing pretty well. Let's put this one on a longer chart though. How well it's doing. Alright, so this one hasn't quite broken a new all-time high just yet, but we're right there. We're right there. I mean, within $3.22 about. But a lot of people are piling into this Magnificent Seven, and Wall Street is expecting this Magnificent Seven will beat the broader market and remain in the driver's seat the remainder of this year. It's made up of seven stocks, Magnificent Seven, and these seven stocks make up Nvidia, Apple, Google, Meta, Amazon, Microsoft, and Tesla. And a lot of investors are thinking that these seven companies in this ETF will outperform the S&P 500, which if you think about it, huge tech companies with a ton of cash, like it's a no-brainer, right? The larger companies at that. And then on top of that, on top of people piling into this fund with these huge companies, call options for the Magnificent Seven are on an uptick, showing that the market expects these assets to continue to rise. And what a call option is a right, not an obligation, but the right to buy an option to buy. So one call option equals 100 shares. And if you have a call option, that is the right, not the obligation, to purchase 100 shares at a specific price at a specific time. So far, everything's looking pretty good, but there are some concerns, and we just talked about that. Now, let's talk about what's new in the spotlight, and that is going to be Trump trade tariffs. And what we really got is there's this question up in the air that is what will happen regarding these tariffs. The idea is that, yeah, the worst might be behind us. We might not see those 145% tariff levels on China ever again, but you truly just never know where we could go from here. That July 9th deadline to reach a deal is coming up soon, and there are reports that the deadline isn't critical, coming from White House Press Secretary Carolyn Levitt. And what was expected to happen regarding this July 9th deadline was, hey, we'll negotiate. Y'all have time. Y'all got till July 9th, or y'all will get assigned tariff rates. And it seems like that's not going to be the case. It seems like there's some flexibility here coming from the White House. Either there just hasn't been any time for these negotiations to take place with all of the other stuff going on, or the negotiations with these 17 or so countries aren't going well, with the US only striking one deal with the UK. And like I said, Trump can assign the rates, or there will likely be an extension, but seems like we're going to go towards this extension, and they're just going to kick the can down the road, yet another extension, and I'd say that's right out of Trump's playbook. Now, on from Trump tariffs into Trump's possible new chair. This one was interesting because Trump is considering naming the new chair early on, even though Jerome Powell has another 11 months or so until his term is up. I believe it ends out in May. And announcing the pick early would allow them to influence investor expectations without actually being in the position to really do anything. Yet they could start laying down the framework as far as what we are going to do. And this one was interesting because what we ended up seeing, and let's pull up the DXY real quick. This represents the dollar compared to a basket of other currencies. We seen, oh wow. So yeah, we fell below this 98.6% on the 98.65 on the chart on the fibs. Let's look at what it did based on this news, because oh wow. So we're just continue digging ourselves deeper in the hole. So I mean it dropped today, but it didn't like just fall off of a cliff like people were saying. So whatever it is likely to be a yes man regarding this possible Fed chair that Trump will announce, and that sent the dollar tumbling to a 3-year low due to the concerns that the Fed's independence being separate from the government. Because how are they separate from the government if there's all of this other? I'm just thinking about like Pinocchio and like what are Pinocchio called? What is Pinocchio called? Like puppets and all the little lines orchestrating the moves. That's kind of the concern right now regarding that. And the that Another one is that rates may end up dropping way sooner, way more than we were expecting. We had Fed President Thomas Barkin urge caution, though, saying that the fog is still dense and sees stagflationary pressures. And he sees cuts soon. He doesn't see some of these larger cuts people are expecting, and he's more in tune with waiting and seeing on the data. But what he said is that whatever it is, it's going to be a 25 basis point cut or a quarter percent cut. So that's interesting. Let's see what that sent off for CME Fed Watch Tool. So it looks like we fell back below 80. Yeah, we're still pretty priced in for no cut on July 30th, 74.9. So yeah, we're getting very close. We're almost up to 3/4 for a cut of 25 basis points at the September 17th meeting. So we're almost guaranteeing that's going to happen. Now, regarding the Fed, some of the people that could be named as the future Fed chair, let me find it right here. Trump is considering former Fed Governor Kevin Warsh, National Economic Council Director Kevin Hassett. He's also considering Treasury Secretary Scott Bessent, Christopher Waller, former World Bank President David Malpass. So there's a lot of other people competing for the job, and that's exactly what they're doing is applying for the job. Yeah, Trump will cut rates if you want to. Man, you tell me to cut rates, I'm gonna do just that, fam. Give me the job, and I'll do just that. So that's where we're at with the Fed chair. This will be if he announces a Fed chair earlier than like the 3 to 4 month timeline, this will be a bit earlier than expected. And I'd imagine whenever that person is announced, there will be a lot of interviews, a lot of yapping, a lot of talking about what's gonna happen, and then the market will start pricing that in early without actually moving the rates just yet and not having the position. We got some data today as well on durable goods manufacturers, shipments, and inventories orders. And in May, what we've seen is demand for durable goods jumped 16.4%, reaching the highest level in 11 years. The increase was because transport equipment new orders soared 48% despite a wider slowdown in business investment. The durable goods market encompasses all goods made to last at least 3 years. So think your automobiles, your planes, electronics, and so on, so on, so on. We also got US jobless claims, and this will be for last week. And what we've seen is in the week ending June 21, the advanced figure for seasonally adjusted initial claims was 236,000, a decrease of 10,000, falling to a 5 week low, showing no sign of layoffs to a large degree from businesses. New claims fell 38 of the 53 states and territories here in the US, and the number of insured unemployment during the week of June 14th was 1.974 million, an increase of 37,000 from a previous week's revised level. This is the highest level for insured unemployment since November 6th, 2021, when it was 2,041,000. So all of this is interesting. So this is the highest level since November 2021. It's taking longer for people to find jobs after losing a job, and overall jobs are just getting harder to get right now. So this a lot of people are referring to this report that released for last week just being a yawner, like that little emoji, just because it's kind of just chilling. The initial jobless claims dropped, so it's not showing any red flags or anything. So people just kind of looked at it and was like, oh, all right, jobs aren't doing terrible right now. So let's keep on going. We had US GDP's third revision estimate come out, and what we've seen is that the US economy contracted more than previously thought in the first quarter. GDP, which is a broad measure of goods and services produced across the United States, contracted by 0.5% in January through March, with the previous estimate of 2% of a 2% increase. So we actually ended up contracting. This third estimate reflects downward revisions to consumer spending and exports that were partially offset by a downward revision to imports, the Commerce said. Imports subtract from GDP's calculation since they represent spending on foreign made goods and services rather than goods locally here in the US. The first quarter was the first contraction in 3 years, and Fitch Ratings expects to see only 1.5% US GDP growth this year, along with only one cut from the Fed, and tariffs pushing up inflation, a slowing labor force, and high inflation expectations remaining high. So Fitch sees only one rate cut. They see stagflation in the mix, just kind of like the Fed does, and they only see they only see GDP growing by 1.5% in the United States. So that's all the economic data we got today. Now let's look at the Iran versus Israel war with the ceasefire still seeming to hold. The supreme leader of Iran came out and said that the United States achieved nothing from its attacks. And let's go on to see what else. So, United States planned for years to destroy Iran's Fordow nuclear site. The White House said the United States was on a diplomatic path with Iran after the end of the 12-day war between Israel and Iran. Trump officials are eager to use the momentum from the ceasefire to push for a peace deal in Gaza and broader reordering in the Middle East that would see more countries establish diplomatic ties with Israel, building the Abraham Accords signed by President Trump's first term. Interesting. State play after yada yada. So yeah, it doesn't seem like we've gotten much more news right there. Trump isn't reconsidering decision to revoke security details for former government officials. Trump not afraid to use force against Iran again. White House press secretary Caroline Leavitt said that using force against Iran wasn't off the table should Iran build its nuclear program. Though she said the president prefers diplomacy. Uh, diplomacy. He's not afraid to use strength if we need to, Leavitt said, but she added the president wants peace. He always has. Right now, we're on a diplomatic path with Iran. So that's kind of where we're at with that. I mean, Trump, if anything, all of the news regarding the Iran and Israel conflict that seems to be ceased right now regarding that ceasefire, it seems that it's just Trump and the news anchors arguing whether or not the U.S. actually did damage to these facilities or not. So all day long, Trump's just been truth socialing, fake news, fake news, fake news. They need to fire these people. We did obliterate. And then the news anchors are like, yeah, we've only set them back by like a couple months, and they're likely still building nuclear weapons, and there's probably this other nuclear facility which we didn't even touch. So there's a lot of uncertainty regarding this, and I'd imagine we're not cleanly out of the water yet, but hey, stocks are out of the water, jumping away from those all-time highs. It's just, we're going to the moon, everybody. So I'll be back tomorrow. We'll keep on covering this. We'll keep on watching. We made it through the week barely. Love y'all. Thanks for hanging out with me. And like I said,